everybody, good weekend. In today's Market Minute, I'm going to give you 3 reasons why I think the bottom is in for the year. Welcome to the 12-minute trading Market Minute for Sunday, the 2nd of April. I'm going to start this by looking at the monthly, weekly, and daily triple fractal chart of the S&P 500. And the thing that I care about most at this point is the fact that on the weekly chart in the middle here, we still have a weekly uptrend. So we put in some important higher lows so far. And this is after having 2022 be just a whole series of lower highs and lower lows. So that polarity has changed to an uptrend. That's very important. And we're also very, very close to seeing that polarity change on the monthly chart. So after seeing lower highs and lower lows on a monthly chart, we're very, very close to seeing this change polarity back to the upside, which is going to create quite a squeeze. Now, obviously, we need to see the weekly chart complete the deal by trading above 4,200. But number one is the weekly uptrend. Number two, I've got a daily chart of the put-call ratio here. And what we've had recently was one of the worst and highest values of the put-call ratio. So what this means is the majority of traders are going long on puts instead of calls. And this is a contrarian indicator, especially as we had what amounts to a reasonable higher low on the S&P 500 chart. At the same time, we had this higher high. So this creates this sort of divergence. Again, this is one of the highest values that we've seen of the put-call ratio recently, and that shows that so many traders were going negative or were extremely pessimistic on conditions working out, and they seem to have worked out. It seems to be the banking crisis has quickly been swept under the rug over the course of the last week. Now, we might have just kicked the can down the road, but right now what we're seeing is the price is moving higher. And the number 3 thing I want to bring to your attention is the character of this market has changed dramatically over the last couple of weeks. Whereas just 2 weeks ago, anytime we had an upside gap, an early strength that was being sold into, early strength was being sold into, and that all changed last week as early strength gapping higher. These gray boxes are gaps. All these moves are gapping higher. They're not bothering to close that gap before heading higher to close at the highs of the day. And in this case, the highs of the week. That's extremely bullish to see that type of behavior, especially the change from something so bearish just a week ago. So the worm has turned, and it did it very, very quickly. We can all talk about reasons why this has happened, but I think number one is that the banking crisis seems to be done for now. Maybe it will be back later on, but it's done for now. Number two is that the Fed's kind of done right now because of the fact that they raised rates so fast over so short a period of time, they broke the banking system. And so the Fed's going to be very, very careful about over raising rates from here on in. So the Fed's pretty much done. And this is the pivot that we've been looking for. Let's see if we can tack on from last week's gains into the second quarter. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.